financial and capital structures in them. All right, so we're a big consumer of capital. Is there money out there? Well, here's another fascinating, I find this stuff around the markets just amazing. So looking at public equity markets, and I've come back to Australia this time, this chart shows back from 1990 how much money has been raised in the Australian market by calendar year. Now, our economics team are forecasting that $75 billion is going to be raised in the Australian market this year. $75 billion. I personally think they're a little bit light. More than $50 billion has already been raised in the Australian market. Staggering numbers. And when you look in absolute terms, it is more money than has ever been raised. So you say, gee, that's a bit of a high watermark. But if you look as a percentage of the total market, even if we raise the $75 billion, it will only be 7% of the market. And the last time we had a big dip, last time we had big sort of capital raisings, after coming out of the last recession, out of the early 90s, we were raising 11, 10, 9% of market cap. So we have a much bigger stock market today. And notwithstanding that we've raised 50, we're projecting 75 billion, there is still more money that's out there. This line here actually tries to capture how much money is out there. It looks primarily at superannuation. And it says that actually there is still lots of money in the system that can be invested. So, from an infrastructure point of view, on the equity side, this story looks pretty good. Then you go around to the rest of the world and you say, how does that compare to the rest of the world? Well, to put it in context, Australia is about 2% of the world's stock market, and we tend to raise about 4% of the world's public equity. Because superannuation, it is true that super actually gives us more money in our markets than many of the other markets in the world. All right? But we're still only 2% of the market. Interestingly enough, that 50-plus billion we've raised is about 6% of our market cap. You run to the major economies of the world, nobody's even raised 2% of their market cap yet. All right? There is no reason to believe that we are any different than the rest of the world. It is a little easier. Our rules here make it fairly easily to raise up to 15% of your market cap. So it's a bit easier in Oz to raise money, a bit easier. And I think that's part of the reason why we've come out and raised money quicker than the other economies. But it actually says the other economies of the world are probably going to raise a bunch of money on their market, probably going to raise a lot of money on their market. And when you come back to the context that we normally only raise 4% of the world's equity, and that's already $50 billion, you realize there is probably a lot of money going to get raised in the world. Now, that's all public markets. For most of us in the infrastructure sector, a huge part of what we do is in the unlisted market. Well, last year there were 24 infrastructure funds raised, raising circa $21 billion. And for those of you who are familiar with the unlisted funds, they tend to raise, let's say $500 million, but they say their target is $2 billion. So they've actually raised $21 billion US. The target of all those funds, plus a few others that haven't actually reached closing, is more like $90 billion. Now, I don't think they're going to raise $90 billion. It's a lot harder to raise money today than it was. But $21 billion, most of that is unspent. I spend a lot of my time going around the world seeing these various funds in New York, London, Paris, wherever, and most of them are sitting on most of this money. They've been kind of scared to invest it at the moment. Kind of hard to get brave to invest in January, February when you're watching airport traffic drop 15%. We bid for Midway Airport in Chicago in October. It was kind of brave to put up a bid when you could see that the world was coming off the boil. Now that the world's stabilized a bit more, I think you will see a lot of that money come back in. I'm sure we will. All right, well, another stat that I want to put up, and this is one of my great bugbears. I've had people tell me over the last 3 or 4 months, oh, isn't it true, Steve, you can't do more than a $300 million project, a $400 million project, take your pick. Well, I just went back and picked out, over the last 5 months, a couple of projects. So we've been through the worst part of the crisis, and these are just a stack of random kind of billion plus, $2 billion plus projects. A couple that have been personally involved in. We bought a utility in Washington State for $7.4 billion back in February. Now, utilities, regulated assets, obviously very stable. We financed a toll road in Florida at $1.8 billion. The M25, we weren't involved in that, but a big high-profile project in the UK, $1.3 billion. Point to me is that there have been a number of big financings. Clearly there have been a lot less than there have in the past, but even in the worst times we managed to do these. And of course last week, 2 consortia had submitted bids on the desal in Victoria. It is an enormous project. As I said to people, it is probably the biggest project that's being bid at the moment, or was being bid at the moment in the world. You know, it's a $4 to $5 billion total capital funding, and 2 groups showed up with the money. Now, there's no doubt the government mechanism that was used to support some of that debt was critical, but my point is we're coming out of some of the worst times, and we've been able to do big projects. We should be optimistic that we'll be able to do a bunch more. The good news is the markets are stabilizing. I kind of used to get depressed because all these graphs used to stop about here. This is the VIX, which is an index out of Chicago. It doesn't really matter. It's about option volatility. The real point, it's about volatility in the world. And the staggering thing is the VIX was, it's pretty stable. It bounces around. It is just unbelievable how much it rocketed up. But it's also rocketed down pretty quickly. And one that's probably near and dear to many of us in the room is this is sort of average borrowing spreads. It is amazing in the last 6 weeks how much borrowing costs have come down, especially when you think that underlying interest rates dropped sort of 6 or 8 months ago, especially short-term interest rates. What happened at the same time, it was a race to me between whether underlying interest rates would drop faster than banks would raise their margins. But what's actually happened since is, and this is all quite a recent phenomenon, lots of cash has come back to the market. And what that's meant is that borrowing costs are starting to come down. And you can see in some cases, the high yield spread, just highlights that people got so afraid of risk. Those numbers are almost, it's questionable whether you can even believe that the margins got up to almost 20% because just nobody wanted to do a deal. The interesting thing is there is actually stuff getting done. We raised €500 million 6 weeks ago for a road network that is owned by MIG in France called APRR. It's a BBB minus credit, €500 million. It's got about €8 billion of debt, so it's a big borrower. The amazing thing to me is 9 weeks ago we couldn't have raised anything. 6 weeks ago we launched, 450 points over, so fairly expensive money. We opened the books at 9. By 9:30 we'd covered it. By the end of the day it was 10 times covered. Right? It is a period of volatility, though, right? It's amazing to me that 3 weeks earlier we couldn't have raised anything, and then all of a sudden we can raise a ton of money. So I will talk to you in a minute, though, about that this is good that markets are stabilizing. We still got a few problems ahead of us in the markets. As far as governments being constrained, I think most of you are aware of this, but it is worth looking at the numbers, and I think it's also worth keeping in context where Australia's at. So net debt to GDP, it's a sort of standard measure of government borrowing. You look, UK, US, Europe, they're all headed for about 80%. 80%. Japan, headed for about 140%. Of course, the amazing thing in Japan, they fund that whole 140% in Japan, and then they have enough money left over to fund half the US deficit. So, good to have a nation of savers if you're going to run a deficit. The amazing thing is, we're talking about being resource constrained here. We're only talking about getting to 16 or 18%. But I guess the thing that I see, and I see this in talking to governments all over, is that they all recognize this is coming. They all want to do infrastructure. As Mark mentioned, it is a bit of the flavor of the month. Big demand, great for a lot of reasons, but you're going to have constraints on the funding. And this is coming. There's just, you can debate about where it's headed to, but I just saw this morning that the UK is going to pump another £50 billion into repurchasing of securities to pump more money in the system. It's amazing how you just kind of say, oh, it's just $50 billion, They were going to cap it at $150 billion. Now they think maybe they'll cap it at $200 billion. Staggering numbers. Those are pounds, too, right? So, $400 billion. So I think that this will drive more private investment, but I also come back to the service delivery model. I can't harp on it enough. I am a firm believer, and I hope most of you in the room are, we have proven time and again the ability to deliver projects. We have to keep doing that, but we did it through some times when actually materials and labor were in